Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down an action-packed day in the markets. We've got a lot to cover, from major index moves to standout performers, Fed drama, and some big earnings updates. So let's dive right in and see what's shaping the landscape for us long-term investors. First up, let's talk about the broader market. It was a strong day across the board for U.S. indices. The Dow Jones led the charge with a solid gain of over 1.6%, reflecting renewed confidence in traditional sectors. The S&P 500 wasn't far behind, climbing just over 1%, while the Nasdaq added nearly 0.9% as tech held its ground. Even the Russell 2000, representing small caps, surged more than 2%, showing broad-based strength. What's driving this? Well, a mix of solid corporate earnings and some easing of inflation fears, despite ongoing geopolitical tensions. For us long-term folks, this kind of resilience signals a market that's still got legs, even if volatility lurks around the corner. Now, let's zoom in on some of the day's biggest winners among large-cap stocks. Tech continues to make waves, with Intel jumping nearly 5%, a nice bounce for a name that's been under pressure. Advanced Micro Devices also had a strong showing, up over 3%, riding the wave of AI and chip demand optimism. Outside tech, energy names like Equinor caught attention with a 3-cent plus gain as oil prices remain elevated. These moves highlight pockets of strength, and for long-term investors, they're a reminder to keep an eye on sectors benefiting from macro trends like energy security and tech innovation. On the flip side, not everyone sailed smoothly today. Tesla took a hit, dropping over 5%, as concerns about delivery numbers and competition in the EV space weigh on sentiment. ASML, another key player in the semiconductor space, slipped more than 3%, reflecting some profit-taking after a strong run. Even GE Aerospace saw a pullback of nearly 4%, despite its long-term industrial appeal. Short-term dips like these can sting, but for us long-termers, they often spell opportunity, especially in names like Tesla, where innovation remains a core driver. Looking at the market movers by activity, NVIDIA continues to dominate the volume charts with a modest gain, holding its ground as the AI darling. Tesla, despite its drop, saw heavy trading as investors debate its next move. Intel also grabbed attention with high activity, buoyed by its performance today. These names are the pulse of the market right now, and for long-term strategies, they're worth watching for entry points during pullbacks or confirmation of sustained trends. Speaking of volume, the most active stocks today paint a similar picture. NVIDIA and Tesla are again at the top, showing just how much investor focus remains on these heavyweights. Names like Nike and Nokia also saw significant trading, hinting at sector-specific interest in consumer and telecom spaces. High volume often means high emotion, so while it's tempting to jump in on the action, us long-term investors should use these moments to assess fundamentals over hype. Shifting gears, let's touch on some of the big economic headlines shaking things up. The Fed is front and center with Jerome Powell's surprise decision to stay on as a governor after his chairmanship ends. This move, amid tensions with incoming chair Kevin Warsh and political pressures from the Trump administration, raises questions about central bank independence. For us, this isn't just drama, it's a reminder that monetary policy can sway markets in unexpected ways. Meanwhile, inflation data spiked to a 3-year high, driven by energy costs tied to the Iran conflict, which could keep the Fed's hands tied on rate cuts. Long term, this means we need to brace for potential cost pressures on businesses and consumers alike. Now, let's dive into earnings, as it's a crucial time for gauging corporate health. This week, we've got heavy hitters like Microsoft, Meta Platforms, Amazon, and Apple reporting, and the results so far are a mixed bag with big implications. Meta beat expectations with a 33% revenue jump, fueled by ad growth and AI momentum, though CapEx concerns linger. Amazon crushed it with a 17% sales increase, powered by AWS hitting a 15-quarter growth high. Microsoft also topped estimates, with cloud and AI driving an 18% revenue surge, though heavy spending on infrastructure raised eyebrows. These results underscore the AI boom's double-edged sword, massive growth potential, but at a steep cost. Looking ahead, Apple's report could set the tone for consumer tech sentiment. For long-term investors, these earnings aren't just quarterly noise. They're a window into how megatrends like AI will shape portfolios over the next decade. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports and more. Before we wrap up, let's check out some standout performers over the past week. Garmin led large-cap gainers with a massive 21% surge, likely tied to strong demand for its tech offerings. Lumentum Holdings wasn't far behind, up nearly 15%, as optical and networking solutions gained traction. Shopify also impressed with a 14.5% jump, reflecting e-commerce resilience. These weekly movers remind us long-term investors to look beyond daily noise and focus on sustained growth stories. On the other end, Genuine Parts took a brutal 20% hit over the week, signaling challenges in the auto parts space. Rivian dropped 14%, reflecting EV sector headwinds, while Blue Owl Capital shed nearly 4% amid financial sector softness. These declines can be tough, but they often present buying opportunities for patient investors with a long horizon. Lastly, a quick peek at sector performance over the week. Industrials topped the list with a 2.12% gain, likely boosted by strong earnings from names like Caterpillar. Consumer cyclical followed with a 1.62% rise, showing spending resilience. Energy also shone, up over 4.6% on oil price strength tied to Middle East tensions. These sector trends are key for us long-termers to allocate capital where macro tailwinds are strongest. On the weaker side, healthcare lagged with a 0.62% drop, reflecting mixed earnings and policy uncertainty. Utilities and financial services also dipped slightly, showing some defensive softness. While these sectors underperformed short-term, they can still hold value for diversified, long-term portfolios. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with a long-term lens. Be sure to stay engaged with our daily summaries and dive into our exclusive SWOT analyses on MarketSnap for deeper insights into the companies and trends shaping your portfolio. See you tomorrow for more market action.